Trading is very easy to understand if you follow these 3 simple steps I'm going to share with you in this video. But the sad truth is 99% of traders will skip this video because they are impatient and do not know how to apply these 3 steps properly without somebody's guidance. So over the next 10 minutes, I'm going to share with you guys a concept that I honestly wish I knew 8 years ago. So stay tuned. But before we get started, if you guys haven't already liked this video, make sure you do that for me. And now we will get into my computer and get into the good stuff. Before we get started, this is my new website. It is officially out with all my up-to-date products. FX University is now $97. That is a one-time fee. This is my top forex course, great for any beginner trader. If you want to trade live with me every day and learn how to trade US 30, I do have the live trading now open. And for my one-on-one mentorship, you have to go here to click get started, and you're going to have to book a call with me. Now, the first step is figuring out what time frame you're going to trade on and the times to trade. Timing is honestly one of the most important elements when it comes to trading, and a lot of traders miss this because they're trying to trade during the Asia session or when there's no session, and they're wondering why their trades are taking so long to play out and they're not hitting their stop loss or their take profit. Honestly, when you guys are trading, you want to see a reaction off your entry level very quickly. And that's why I love US 30, because there's so much volatility to where I enter a trade at the market open and it's moving immediately. So let's go over, this is a really big hack for you guys too. Instead of you having to figure out what times to trade in that BS, just go and use what I'm going to teach you right now. So for the first one, we have the New York session. The market open is at 6:30 a.m. PST. I'm usually using all time frames, so I'll do like a top-down analysis where before the market open at 6:30, I show up 5 minutes before, and I'm going to look at the daily, the hour 4, the hour 1, the minute 15, the minute 5, and so on. But when I'm actually like executing a position, I like to focus on lower time frames, the minute 30, minute 15, and the minute 5. So go through on your chart when we're done with this video and really look at these times that I'm giving you in the time frames. Now the next one, if this is the thing too, if you are an impatient trader, I would trade during the New York session. With me, I'm very impatient. Like, I want to get in and out of my trades as quickly as possible. So the New York session, there's definitely more volatility. But if you're like, hey, I'm a chill dude, I'm laid back, I have no rush, then you want to be trading during the Asia session. There is less volatility, especially during this time of year, but we're going into the better months of trading, so we're going to see a lot more volume being put into the markets. But if you're more of a chill trader and calm and relaxed, I trade during the Asia session. There aren't going to be as big moves. They aren't going to be happening as quickly. But hey, there's still good volume during the Asia session with US 30. Now, the times that you want to be trading US 30 is 5 p.m. and 6 p.m. PST. So this is the hack for you guys. If you go to your clock app on your phone, you can go and set an alarm. So when I used to trade during the Asia session last year, I would have an alarm that would go off at 4:57 p.m. That's my time in California. So this alarm, it would repeat Sunday, Monday, Tuesday, Wednesday, and Thursday. And once I saw that alarm go off, I'd go to the hour chart, I'd look at the previous hour candle, how it's about to close, and I'd be like, all right, is this a good candle to enter on? Should I buy or sell? Boom, and I'd execute it. Then I would have the second time right here, the 6 p.m. PST. So I'd have another alarm that would go off at 5:57 p.m. And I'd look at that alarm when it went off, and I'd go to the chart and say, okay, do I see a setup here? And if I didn't see a setup, I wasn't going to force a trade. I would just walk away and come back the next day. So that's something that you guys can do. Instead of you just eyeing the markets all day like a freaking hawk, just put your alarm, set them. When they go off, go check the markets, boom. With this Asia session strategy, like I said, it's going to be for more patient traders. It's going to take a little bit more time to play out. So I'm mainly using higher time frames, like the hour 1 is probably the only time frame that I'm going to use. If you want to look at other time frames for this time, you definitely can. Completely up to you. Now the next one is the London session, and we're going to do our same theory with the clock app, where we have an alarm set at 11:55 p.m. PST that goes off. Then I have 5 minutes to go to my chart. I can do a quick analysis and see what I think is going to happen. So we have that 12 a.m., then we have the 1 a.m. PST time. Same thing using the 1 hour time frame. You can use lower time frames, completely up to you in what you want to do. Now let's actually go to the chart and look at these times right now. So let's go from the Asia to the London and then to the New York session. So the first candle that we're going to be looking at is this 1600 candle. If my alarm went off and I saw this candle, I'd be like, oh, that looks like a potential buy right there. I would buy. With this strategy during the Asia session, since there isn't a lot of volume, here's a hack. I would usually go for like 500 pips. I would just try and catch like a quick 500 pip move, be in and out of the markets and do my thing. So if my alarm went off and I saw this candle, I'm like, oh, that's a good reversal candle. Let me buy it. Ride it out for 500 pips or wherever you see a good exit. Okay. So we have our 1600 time, then we have our 1700 time. These are the two candles that I would be looking at to get into a position during the Asia session. And we have our London session going into London right here. So the first one would be this 2300 candle. This is a candle that opens up at 11 p.m. and then closes at 12 a.m. Okay, we have that first candle, then we have our second candle right here. This is a 12 a.m. to 1 a.m. candle. And if I didn't see a setup right here, and I kind of saw we were dropping, I'm like, all right, we're going short, but why is there this bullish candle? I would have waited for the next candle, probably sold here, wrote it down to this level right here, and just had my stops above this candle's high right there, since we're on the hourly time frame, and that's a good trade right there. With the London session, I usually would go for like 500 to 1,000 pips because there is more volume during the London session, but what I like is it's kind of like a mix of the New York and the Asia session in a way, the London session, so there's still volume there, and I can still kind of be relaxed and patient and let the trade do its thing. So those are the two times. Now let's go to New York. I'm going to go to the minute 15 chart and we'll look at that. So the minute 15 time frame, I'm looking at the 615 to 630 candle right here. So this candle that says 615 opens at 615, closes at 630. I'm going to be looking at that candle for confirmation on if I see a setup or not, because after this candle closes, it's going to be the market open. That's when, boom, the casino bells are going off. That's when the money's being fluctuated into the market. So that's the time that I'm going to be trading during the New York session. Step 2, what are we going to look for? Well, I like to look for trending markets. You guys all know the term, the trend is your friend. Very true, and it's so cliche, but that term is so true because a lot of the time, whatever is happening in the previous days, the previous sessions of the market, it's most likely going to continue to do the same thing. You just have to find where is my entry going to be. And that leads us to step 2, where it's looking for those A and B patterns. What I mean by A and B patterns is like when I see the markets forming this hill, that's signaling a good sell. When I see it forming a valley like this, that's signaling a good buy. So there's a V and then the A pattern. I'll show you right now. So if you see an A, that's signaling a sell. If you see a V, it's signaling a buy. And then we're going to look for reversal candles. So a lot of the time you can actually like see a reversal candle within these A and B patterns. So let's go to the markets and look for the trending markets, the A and B patterns, and for reversal candles. Okay, first off, these are beautiful trending markets. I like to see that the market is just going in one gradual trend. Notice how it's going higher, then lower, then higher, then lower, then boom, higher, lower, higher. So this is where you want to kind of add in things to figure out your confluence. This is where you want to add in the times for the New York session. Then you want to look for the trending markets. Then you want to look for any A or V patterns. Then you want to look for any reversal or continuation candles. So we have our time right here, 6:30 a.m. right here. We have our trending markets. Boom, we're in an uptrend. So our overall bias is to go with the trend. We're going to buy if we're in an uptrend. Then we want to look for any A or V patterns. We actually can't see right at the market open. We have this beautiful V pattern. And it's not perfect, guys. Like this is another V pattern right here. Another V pattern. It's just very clean. We have another V pattern right here. That's what I'm looking for when I talk about these V patterns. Okay, so let's actually keep this one. And then we have our V pattern right there. Then we need to look for any reversal or continuation candles. So we actually have kind of a doji right here. So the market went up, came down, formed this doji, and then here's that timing. We have our 6:15 to 6:30 candle right here. We would buy after this candle closed, go with the trend, and put our take profit wherever you think it is appropriate. So very, very simple. I'm keeping it very simple. And the way, the thing I can't even talk. The way that I like to refer to the strategy, or the way that I refer to my strategy is I call it the KISS. Keeping it stupid simple. That's how trading should be. I'm not relying on a million indicators like the alligator, the Bollinger Band. I keep it very simple. I have the RSI Plus, 2 EMAs, and I'm really just using price action and going with the trend. So keep it very simple when it comes to trading, guys. Now let's go to step 3. Now step 3 is probably the most important part of this video. And we have to understand as traders that this is an independent career. You do have mentors and you do have signal providers, but at the end of the day, when you are alone in front of your computer about to enter a trade, it's you and only you. You have to be your own coach and have self-discipline and know whether to take a trade or not take a trade, walk away, stay in the markets. There's all these factors that come in play that you need to take action on as a trader. So once you enter a position, guys, let it do its thing. There's nothing that you can do. You don't have enough money in your trading account to control the market and make it go up or down. And I know a lot of you think that your little 10 lot or 100 lot even is going to do something, but it's not going to move the market like that. Okay? Next thing, a great exercise is to journal and get personal feedback. Journaling is more of an activity that's going to give you like your own feedback, because you want to see in the mind of yourself, how are you thinking on an everyday basis? When you're trading and you feel like making a decision that's not a good decision, journal and say, hey, I was taking this trade today and I felt the need to drop a lot size that was too big for my account, but I stopped myself. And by me stopping myself, it actually felt really good. I felt like I accomplished a new level in my trading. I overcame myself as a trader, and it just felt really good. You guys want to have feedback and notes like this. And for the journal too, it's kind of like an end of the trading day entry. You want to just write like, I took a trade on US 30 at 6:30 a.m. I was trading off the minute 30 time frame. I entered the trade because of this. After I entered the trade, I let it do its thing. I then got an alert on my phone that told me the trade hit my take profit, and I was very proud of myself. I let the trade do its thing. I didn't exit it too early. I used proper risks. You want to have your journal as personal feedback for you, because you want to look at your journal in 6 months, 12 months from today, and you're going to be able to see the growth as a trader. And it's not about making money in this industry. I know a lot of you are like, let's make money, let's get rich. Fuck yeah, I want the same stuff. I like the lavish lifestyle and stuff like that. Don't get me wrong. But you have to become a completely different person to actually see your life level up and for you to see change. So keep that in mind. It's about the progress, not the amount of money that you're going to make. Okay? Next thing, keep a MyFX book. If you go to myfxbook.com, this is going to be a great tool for more of the data side, so you can see the growth on your account, the percentages that you're doing a month, the average win rate, all these amazing cool things that you're not going to be able to see from a traditional broker. MyFX book just connects with your broker. So go there, connect your account, and you'll be able to see and have a track record of your account. But it's more for like personal data, because at the end of each month, your bank, they send you a bank statement. So you want to kind of look at the end of the month or maybe the end of the week and say, okay, what am I doing right? What am I doing wrong? Are more of my trades buys or sells? What is my win rate? What's my average percentage that I'm getting per trade? And you want to be able to have all this feedback, because I don't know if you guys do this, a lot of you probably don't, but after every single day, after every single week, you should be asking yourself, how can I be a better version of myself tomorrow than I am today? And you want to hold yourself accountable, because if you are not growing, you're dying, guys. You want to make sure that every single day you're challenging yourself to become better and better. So that's why I tell you guys, like, the progress is so important as a trader. You need to become better every step of the way. I appreciate every single one of you, and I hope you guys enjoy this video. See you later. Peace out.